How is the TCERA benefit plan funded?
The money to pay for retirement benefits does not come from a single source. Rather, it is funded from three sources: employee contributions, employer contributions, and investment earnings. Employee contributions, the first source, are the funds that each member contributes to the plan to help fund retirement benefits. Employee contributions are required for all members of the plan. The rates for employee contributions are determined by an actuarial calculation based on benefits and plan assumptions. The actuary contracted by TCERA is a professional specializing in calculating the future cost of benefits based on the experience of the plan, as well as certain assumptions regarding the future of the plan and its population. The employee contribution rates are based on TCERA membership entry age, which is the member's age as of the date of entry into TCERA's plan or a reciprocal plan if eligible. Reciprocity will be discussed in further detail in a subsequent video segment. The contributions are deducted from the employee's payroll check and deposited with TCERA and are taken on a pre-tax basis. This means that the contribution is deducted from salary before income tax withholding is calculated. The retirement office maintains a separate record of contributions and interest for each member. Once deposited, the employer has no access to retirement funds held in trust for retirement benefits. The second source, employer contributions, are the funds that the employer contributes to the plan to help fund retirement benefits. These rates are also determined by an actuarial calculation. The employer rate calculation is based on benefits, plan assumptions, unfunded liability, and investment returns. As with employee contributions, once deposited, the employer has no access to these retirement funds. It is important to note that employer contributions made toward retirement benefits are not placed with the employee contributions for each member. Employer contributions are drawn upon only for those members who actually retire from service. The third source, responsible for the lion's share of the funds used to pay retirement benefits, is investment earnings. The TCERA Board of Retirement is responsible for investment of employee and employer contributions. These investments are broadly diversified in an effort to reduce risk and increase return to the portfolio. TCERA employs professional investment managers hired by the board. These investment managers are responsible for individual investments within their particular segment of the investment market. The board employs a professional consultant for investment advice, education, long-range planning, and assistance with manager selection to ensure that investments are managed in accordance with plan goals. Investment performance is important because it determines the rate of interest applied to plan funds, including individual member accounts. Investment performance is monitored monthly and presented to the Board of Retirement quarterly by the investment consultant. These investment performance reports are available for review on TCERA's website, www.tcera.org. Additional information regarding the plan and its investments is available in TCERA's Comprehensive Financial Report, prepared annually to inform members and the public regarding the financial status of the plan. This report is available on TCERA's website. You may also obtain a copy by contacting the retirement office. Interest on contributions is credited every 6 months as of June 30th and December 31st. Interest is paid on the prior 6-month ending balance in the account. For example, interest is posted for December 31st based on the balance in the member's account on the prior June 30th. The interest rate is determined by the Board of Retirement based on the allocation of investment returns required under 37 Act law and related policies adopted by the Board of Retirement. In order to keep members informed regarding the status of their accounts, Member statements are produced annually after December 31st interest posting is completed, generally by March, informing members of the total contributions and interest held in the TCERA account. Remember, upon retirement, employee contributions and interest help fund the retirement benefit, but they do not determine the benefit amount. That amount is based on a set formula and is guaranteed for life because TCERA is a defined benefit plan. If you have questions regarding the funding for TCERA retirement benefits, please contact the Retirement Office.